JJ the CPA here. When you're setting up a new business, or if you have a business, you might want to review your structure. So the first thing to do is make sure you know that there is a legal structure and then a tax structure. Meaning, when you set up your business at the state level with the Secretary of State, that is then your legal entity. Meaning, in the state of Oklahoma, you can be a corporation, you can be an Inc., you can be an LLC, etc. That doesn't necessarily determine how you're going to be taxed. So I hear quite often people say, well, I'm an LLC, I'm taxed as an LLC. Well, an LLC can be taxed as a partnership, an S Corp, a C Corp. It can be what's called a disregarded entity, which means it has one owner and didn't elect to be a C Corp and didn't elect to be an S Corp. And it's then just filed, or the information is filed directly on the business that owns 100% of it, or the individual. If you're an Inc., you can be a C Corp or an S Corp. If you're a Corp, you can be an S Corp or a C Corp. You can have LLPs, etc., etc. So know this, how you're structured at the state level is your legal entity structure. How you are taxed is different. Therefore, you want to make sure that you're taxed in the most advantageous way. Now, really how you need to figure this out is talk with your CPA and ensure that they know what kind of business you're going to have. And here's why. For me, there's really two main businesses I'm working with the tax structure. One is a partnership which files a Form 1065. The other is an S corporation that files an 1120S. The biggest difference between the two is that for those that are a partnership, first of all, you got to have a second owner, but it is for the type of investments that you're not actively involved with. So real estate or your investments into other investments. That way, when you're paying tax on the net income down at the individual level, you will not pay the self-employment tax. When you file a partnership return, if it's from activities that you are involved with and you're literally making the business run, you run the risk and very likely to pay self-employment tax, which is a 15.3% tax in addition to your income taxes. No fun. When you have a Form 1120S, which is the S corporation, you are then where you do not pay tax on the net at the self-employment tax rate. You would just pay income tax on that. However, the catch is with an S corporation, you need to pay reasonable wages, which there's quite an opinion out there as it relates to that, which would be a separate video. So know this, you really need to make sure that how you are set up at the Secretary of State is the best setup for you on the legal front, but that you are taxed in the most advantageous way for you. All right, hey, thanks for tuning in. I'd love it if you'd subscribe to my YouTube channel, and don't you ever forget, you've never met a CPA quite like me.
Well, here's the bottom line. You need to subscribe to my videos, right? I've given you valuable information here. I appreciate you tuning in, but here's what I need you to do. A favor, click subscribe, check out my other videos, and then don't you ever forget, you've never met a CPA quite like me.